we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Me on. Look, with respect to the volatility you mentioned, we've been in the space for a long time. We're long-term investors. It's important to note that this crypto fund, like our first two crypto funds, is not a hedge fund. This is a venture fund. So we're making 7 to 10-year bets. And this fund is really reflective of the opportunity size we see in the crypto space, which is not just financial use cases. We see a lot of opportunities across things like infrastructure, gaming, DeFi, NFTs or non-fungible tokens, what I like to refer to as digital goods. So again, here the message is we see this as just a lot of categories.
Katie, just to put a fine point on it, you're not, therefore, this fund isn't investing in the currencies themselves, in some of the tokens? Because I assume some of the businesses are tokenized.
That's right. We're actually investing in both, just like with Crypto Fund 1, which is 3 years old, and Crypto Fund 2, which we raised just over a year ago and deployed over the course of the last year. We are absolutely investing in tokens and protocols, but we are also making equity investments in businesses. Businesses like OpenSea, for example, the largest NFT marketplace, businesses like Uniswap, and we hold the token there. Of course, also we invested in Coinbase. Many of your viewers have heard of Coinbase. But there are a mix. There's equity investments, and we are also investing in the tokens themselves. We think tokens are really the future of crypto, Andrew.
And, of course, you're a board member of Coinbase, we should mention. Let's talk about what's happened, though, in China when it comes to Bitcoin and what you think it portends for the idea of decentralized currencies.
Yeah, it's interesting. I mean, with China, we've seen this movie before, actually. For some viewers might not remember this news who weren't following the space, but back in 2017, China made similar moves to kind of crack down on crypto. Back then, it was mostly directed at Bitcoin. And they banned, actually, digital currency exchanges in China from trading Bitcoin. In those days, it caused a market correction. People said the market correction going from around $4,000 per Bitcoin to in the $3,000 range. But, I was actually surprised this took them this long to do this time. Let me tell you why. China is actually all in on crypto. Make no mistake about that. Xi Jinping actually declared crypto and blockchain architecture as a top 5 national priority for China. So they are all in on crypto. They are all in on their brand of crypto, which is a closed permission system, kind of at odds with the open, decentralized protocols we see as the future of the crypto system. Bitcoin is one of those. And if anything, Andrew, I think China's moves really reflect kind of the staying power of open, decentralized crypto like Bitcoin, because we've seen this happen before. So I think China's going all in on crypto in a big way. And this is a real opening for Western societies, and the U.S. included, to lean in.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. We had Katie Haun on CNBC, of course, a partner of Andreessen, and then also sits on the board of Coinbase. And remember, Andreessen funded Coinbase. And again, CNBC spins the Hegelian dialectic. The people that are watching the show don't understand about the fourth industrial revolution. As she's speaking, she's not worried about it. We're in it for the long haul because she knows that cryptocurrencies are definitely going to be used. And he also does, but of course he wants to talk down on it after CNBC was pumping it up to the 60,000. And she's asked about the Bitcoin mining. That's right, we've been here before. China is all in on crypto. Why? Because they're leading us into the fourth industrial revolution. And then also we have CNBC speaking on Grayscale. And you guys know I talk about Grayscale on a daily basis because that is the whale. Over the next 2.5 weeks, guys, we have to make sure we're watching them. Because it's like I said, we either can take a dump or we actually can get pushed up. So if Grayscale makes a big purchase at the same time this lockup period is ending, it's not going to really affect us. And just like I stated, it actually can move us up. But definitely we're just going to pay attention to the indicators because we know when it comes to the New World Order, it's all planned out. Y'all have a wonderful day.
What I was saying, but you have this unlock coming in. It has actually been a weight on Bitcoin for the last couple months. And so after July 7th, I think it's July 12th or so, what you're going to see is there's actually not that much selling. So we have a period of time here between now and July 12th where you can see a little bit of a rally. And then I'd be worried about this big, about 16,000 Bitcoin coming off of lock in the middle of July. But after that, you can see that's kind of clear sailing for a bit. So as long as we have the Fed keeping the pedal to the metal and we have risk assets going higher, we just have to get through this little spike of Bitcoin supply, and then I think we turn things around.
Part of this note, BK, was that JP Morgan thinks fair value for Bitcoin is between 25 and 35,000 in the medium term. Do you even think about Bitcoin in terms of fair value?
Yeah, it's one of those very difficult things, like with any currency, to do. The model that I use uses addresses, and we've talked about it on the show before. For me, right now, where I would start to think that Bitcoin is getting as expensive is about 55,000. At about 29,000, it's cheap. So that's kind of the range that I'm looking at right now.
You know, BK, some people might take a look at GBTC because it always, or not always, but it has historically traded at a premium to Bitcoin, and now it's sort of the reverse. There's a discount to the underlying, and so they think the bigger the discount, the more sure money, a sure bet it is. Could that apply in the situation still, or not anymore? Is that over?
Well, what has been happening, the reason why these unlocks are so important is because people had locked in a spread, so they're unwinding that trade, and that's why you're seeing the pressure on Bitcoin. If we see it go back to a premium, and I'm not necessarily expecting to go back to a premium, then that trade might come back on again. And what does that mean? That means people buy Bitcoin or buy into the GBT trust at NAV. GBT has to go out and buy the Bitcoin, and that is a tailwind for the market. So we really need to see that premium come back for it to have another tailwind for Bitcoin.